Hi, my name is Dr. Joshua Aura. I've taught advanced financial management for over 20 years. I teach AFM, AFR, BDA at RCM Online College. Ladies and gentlemen, over the number of years I've taught this paper, I've seen so many students, especially this AFM, so many students who get frustrated for not passing. And they're not like foolish students, no. I'm telling you, these guys are above average by far. The only thing that they do not have is proper exam technique. Proper exam technique is lacking. Now, please listen. If you're to pass this AFM come this April, then what are you supposed to really do? There are those most important topics that you must always master. Now, for example, we have this topic on international finance. So on international finance, what am I supposed to know on international finance? First of all, the theories of international finance, functions of World Bank, functions of IMF, functions of the African Development Bank, and for example, the World Trade Organization. I mean, all of them generally, and you should be able to go and do research on each one of them. Of course, you have done very good videos on this. So in this particular case, for example, like the bank, so you know that, of course, just like any other bank, they're giving out loans to member countries. They are doing feasibility studies. When they do this feasibility study, we say that they are giving technical assistance to the member states. They are also involved in terms of in terms of stabilizing foreign currency exchange rates. If you remember, like right now, Kenya shilling is really appreciating. Why? Because the other day we got loans, which in this case we were able to pump into an economy, which came in form of dollars. So the supply of dollar is too much in the country right now as we speak. When the dollar is too high, when the supply is too high, of course we expect in this case here now the value of the dollar to go down, and of course then the Kenya shilling will go up. So I need to appreciate those concepts of international finance. Now, ladies and gentlemen, from there and international finance, I must understand the arbitrage computations. We have the locational arbitrage. We have, in this case here, the triangular arbitrage. Then we have what we call the covered interest arbitrage. I have to be good in those computations. From there, ladies and gentlemen, I will be able to go ahead and, in this case here, master the concept of what here under international finance. I must know the international parity conditions. There are calculations there. We have interest rate parity, and then we have purchasing power parity. You must know those computations. Fishers is not really that much, but at least international rate parity, I must be very good at it. I must be very good at purchasing power parity. And that is the end of what here? That is the end of international finance. From there now we go to the derivatives, the risk bit of this international finance. The derivatives risk bit of this international finance, we are looking at the hedging techniques. First of all, the types of risks. There are three types of risks. There are three. From there, you go straight away to the hedging techniques. And the hedging techniques, if I were you, I would look at forward contracts. I look at money markets. If I get time, I can also look at the futures. Just briefly, how do they work? How do they work? How do they work? And of course, if, ladies and gentlemen, I'm going to the options, I would know the theory on options. But again, there is nothing wrong in options in knowing the Black-Scholes. The Black-Scholes model, where we talk about D1, D2, if you remember those things, and then you're able to get value of an option, value of a call option, value of a put option. That is really, really easy. With our videos, you cannot go wrong. With our videos, you cannot go wrong. All right? Then, ladies and gentlemen, in this case, the moment you've been able to understand those derivatives, well, the money markets, I hope you're able to remember those rules like foreign boyfriend, buys dinner. I have very good videos on that. Then automatically you will be able to ace through this exam. That is the one area, one sphere of AFM, which really defeats many, many students. Now from there, we go to the downside. The downside, I'm looking at the capital investment decision. Under capital investment decisions, ladies and gentlemen, of course, I appreciate the fact that this is quite a lengthy topic. But I mean, there are those key areas, if I get 2 videos today, I'll be able to crush them very fast. Like sensitivity analysis. I'll be able to, ladies and gentlemen, go through replacement, the There are two types of replacements. The ones you're given 1, 2, 3, up to 4 years. And then there is this other replacement where you're given two machines. There is an existing machine and we want to replace it. So I need to do the comparisons very well. To do the comparisons there very well. Ladies and gentlemen, after that, then still under capital investment, if I were you, I would capital investment or capital budgeting. I'd also think about simulation. Simulation, there is one good video on simulation. Just do one question because the approach is the same. From there, I'll be able to also go and look for one question on decision trees. Of course, I know in capital budgeting, like last semester, they were able to catch more students but on the wrong footing when they brought this concept of utility theory. But even with this utility theory, if you saw how that question came, I mean, it had the tata thing where we have in this case here price and probability. I mean, even if I don't understand quite a lot, I mean, I should have multiplied here and compared the figures with. Also for this one, utility, I've done a very good video if you're interested. From there, ladies and gentlemen, I've been able to decide on this investment, the capital projects I want to go for. Then how do I finance? Financing decisions are very, very key. And the financing decisions, I'll know how to do those WMCC and WACC sketches, if you remember. I'll be able to know how to do that. That's very important. Of course, for me to do them, I'll need to know how to get cost of equity. I'll need to know how to get those cost components. And remember, to do bond valuation. And the financing, when you talk of bond valuation, don't forget the Macaulay. Especially the Macaulay duration. That has featured severally. All right. And you don't, of course, these things I'm telling you, they may look a lot, but you see, it's about videos. And these videos, you'll be able to do what you have to get them from us. And then, of course, you'll be able to like increase the speed. You don't have to watch them at one. You can increase the speed. All right. Now, ladies and gentlemen, from there, I would also want you to still under financing. Don't forget this net operating income model. Don't forget the Modigliani and the Miller. And then, of course, financing, when you are making this, like getting this CAPM, cost of equity, remember also this thing of Hamada. I've done so many videos on Hamada's model. Now, ladies and gentlemen, those are key topics in finance, those 4. Once I'm good at them, then I'll be able to come and look at now the theory aspect of it. The theory aspect of it, of course, real estate will take a huge chunk of it. Real estate. Of course, even real estate has got computation, but the computation of real estate, I can connect them to Modigliani and Miller. You must have seen this in the questions, exam questions, where you're given like this real estate has got this EBIT, this other one has got this EBIT, the other one is leveraged, this other one is unlevered. So then how do you get farm value? Using net income approach, or they can use net income approach or net operating income approach, knowing how do you get those farm property values. All right. So the evaluation really, if you're keen enough in terms of projecting cash flows, then you will never go wrong. And then, of course, now come and look at the theory aspect of it, like the risks encountered when you are handling real estate. The first risk is liquidity risk. When it comes to selling these properties, people may be illiquid. People may not be having money, so will not be able to sell. We have in this case here the concept of what here, I mean, like now interest rate risk, like now interest is on the roof. So most of these investors in real estate are really, really suffering. So those risks, you have to understand them. You must understand mortgages, all right? What are the requirements? What do you need for you to be able to get a mortgage in Kenya? That has been asked. You need to know the difference between primary mortgage, secondary mortgage, all right? So there are those great theories that I would really want you to understand. And remember, your examiner has never brought this question on mortgage amortization schedule. How I wish this time around he brings it. When talking about theories of AFM, I'll always remember the cloud, we call it crowdfunding. If I need $1 billion today for RCM College, how do I raise this $1 billion? Can I go to one bank and then I get the entire? What if I do a concept paper and I upload it on these social media platforms and then I get like 1 million people helping Mwalimu to get 10 or 100 shillings? You know, that's crowd. I'm getting, in this case here, capital from a hugely dispersed population, many people, crowdfunding. I should be able to know something to do with the blockchain technology, the concept of immutability, that if it's blockchain that a bank has adopted as a system, then there is no way a hacker will be able to get inside and make changes. But these blocks are able to talk to between themselves. Once in this case here there is any change here, every member of this block society will be getting a notification. So it becomes, in this case here, very hard for you to do what here to steal. Remember the concept of encryption. Like I gave you a very good example. Somebody has sent a girlfriend, in this case here, an SMS. This SMS only makes sense when it is at the boy's phone or at the girl's phone. In between here, when this SMS is working in between here, it is always working in some language, which in this case here will need some kind of decoding. So blockchain also works on these encryptions here. They are normally encrypted. You can't, in this case here, be able to say that now I'm a member of parliament, that I would want to intercept Aura's documents and then I make changes. No, immutable. You can't. Blockchain, very, very important. And then, of course, we have the cryptocurrencies. Cryptocurrencies like, for example, Ethereum. We have the famous Bitcoin. All right. I need to know, for example, like how do we account for them? Not per se accounting because of financial reporting, but we appreciate these crypto, ladies and gentlemen, they are virtual currencies. It becomes very hard even for us to really work out with them, given what their fluctuation in terms of value. Right? Then I should be able to have at little bit discussions, and I've been able to do very good videos surrounding this concept there. All right. Now, if I'm the one then going to do this paper, the moment I've cleared with the areas that I've been able to mention, there, ladies and gentlemen, I will not forget this concept of what is happening outside here, still in terms of theory. Like now we have just gotten a Eurobond. I should be able to know the advantages of working with a Eurobond. Eurobond have loans have been able to help us, for example, stabilize our foreign currency exchange rate. All right. So many advantages of the Eurobond. What is Eurobond? What are Sukuk bonds, the Islamic bonds? I should be able to know that language. All right. I should be able to know something to do with behavioral finance. All right. So that will really, really help me. And then once I'm able to finish these areas I've told you they're mandatory, then I'll be able to go to these others, which are equally important, but I can't start with them. Like, for example, mergers. Mergers, there is one video that you need, which is able to show you how to compute exchange ratio, etc. like that. And then mergers has got a lot of theory questions. No reasons why companies merge, financial synergy, etc., cost cutting, etc. No, in this case here, why mergers, just like marriages, fail at times. Know the defense mechanisms. All right. So mergers, key, very important, key. Not like the others that I started by saying, but at least I know even the time investment that I'll be able to put into mergers will be small because one video covers like everything there. All right. Now, ladies and gentlemen, from there we have the portfolio. Like, portfolio is also another one. All right. Now, in this case here, the components of portfolio risk. We have in this case a systematic risk. We have unsystematic risk. All right. Know how to compute standard deviation of a portfolio. The other time they were able to scare students by giving them 3 assets of a portfolio standard deviation. That wasn't easy, but right now I'm so sure you guys will be able to handle that if you're given. All right. And then, of course, under portfolio theory, ensure that you know how to calculate CML returns and CAPM returns. Most of us give a lot of light, a lot of time to CAPM returns. We forget what we call capital markets line, the CML, the one that makes use of total risk, standard deviations. And then, of course, the moment I appreciate that, I need to know how to compute Jensen's alpha value to measure performance using the Sharpe's model, using the trainers model, at least those 3, Jensen's, Sharpe's, trainers. Very, very important. It can't become very, very exhaustive if I don't look at what we call arbitrage. Arbitrage is key. We have very good videos on that. Now, ladies and gentlemen, of course, I'm not saying that I'm trying to predict exams, but at least I've been able to give you, given my years of experience, I've been able to give you those key areas that can easily come, and I expect you to join our block revision. Our block revision this time round are quite funny because we shall be able to do a few Zoom classes, like 4 Zoom classes, capturing this block revision. And then now the other block revision content will come in form of videos. So you'll be required here to pay us Kenya shillings 2,000 per subject. Once you pay us this Kenya shillings 2,000 per subject, we shall give you access to whatever concept I've been able to discuss there. All right? We shall be able to give you that concept in form of block revision. Zoom plus videos block revision. And then number 2, I'll be able to give you access to our Super 12, very important, Super 12 questions in the form of videos. Super 12 questions in the form of videos. And then we shall be able to give you a mock. So this mock, I'll not promise you that I'll be able to mark given the number of students we have. Like if it's AFM, currently we are talking of 400 plus students. So if I start marking, I'll take more than 3 weeks to mark. But normally what we do it at RCM, how we do it at RCM, once we give you the mock paper, then you should be able to do the mock questions and throw them in your students' WhatsApp groups, and you'll get students discussing. And then if there will be areas that would need the teacher's intervention, I'm always there to respond. So ladies and gentlemen, if you are interested in joining our block revision, which is coming in form of a combo package, this is our pay bill number. Our pay bill is 62 42 839. Pay bill, I repeat, 62 42 839. Account is your subject. The name of the subject here, which could be AFM, AFR, QA, etc. All right. So remember, 2,000 is per subject. If you're paying for 2 papers, you need to pay 4,000. Then, of course, after paying, you need to contact us, or if you have got any inquiries, contact us at 0793 555 000. I wish you well as you prepare for these exams. May God give you a sufficient grace. May you get the time. May you get, in this case here, appetite to study using this technique. You can never go wrong. It's a technique that you have used for so long, which has really worked. There are so many students who call me. They tell me, Mwalimu, you gave us that technique of low-hanging fruits, and I used that technique. I mean, I had not studied quite a lot, but I was able to do what here? I was able to pass. And really, that is what we want to hear. Because to us, it's all about what here, the end. If you are able, in this case here, to pass, then you can justify in between here. Whatever happens, we don't want to know. You pass. This is very, very easy. So please, I wish you well. And of course, as you pass, come next semester, always choose RCM College. You can never go wrong. Thank you very much. Be blessed and bye.